Welcome, everybody. Welcome back to another Study Wealth podcast. We every once in a while talk about different asset classes. Actually, we talk a lot about different asset classes. One of them, of course, an emerging one is crypto. Sometimes people get weird feelings about it. Here, we're just here to talk about it through the lens of education, diversification. What is it, so on and so forth. And along with me, special guest today, Don FRIEDMAN from DACFP, which actually stands for Digital Asset Council of Financial Professionals, which is the leading provider of crypto education, I think largely for the professionals, right? But also for people at home. We can get into that later. Don, how are you?
I'm doing well. Great to be here. Thanks, Serge.
It's great to have you here. We met actually, just looking back on the calendar here, I think literally like about a month and a half ago. And, we actually didn't get a chance to talk too much about crypto at the time, but we did touch on, I think, what was really a primary concern for, and I think also what you're doing, which is kind of the thought of, how does Bitcoin fall into a portfolio? Where kind of are we along the journey of this? What are your thoughts around sort of the basic parameters of that?
Well, I mean, the greatest thing that's happened to the asset class from our perspective is the Bitcoin ETF. As you can imagine, there was a lot of pushback prior to the Bitcoin ETF, just around the confusion. And we work primarily with financial advisors, so the complexities involved, and why should I add this to a client's portfolio when, I mean, look at what's happening in the markets. You're getting record markets. Who wants to rock the boat in any way, shape, or form? Plus you had, there's just the whole thing about risk mitigation, et cetera. And so when the SEC finally, for lack of a better phrase, blessed Bitcoin by approving a Bitcoin ETF, that got us to the point where advisors are saying, if this has been approved by the SEC, we'll bring down the wall, we'll listen with an open mind, and we'll consider taking a look at this. And what's happened is it's been the most successful ETF launch in the history of ETFs. You're talking $60 billion in flows. So that's been enormously helpful to the asset class from an advisor perspective.
Yeah. Jumping right sort of, or continuing along with what you just mentioned, and we'll dial it back to sort of more the fundamentals of it. Do you see those flows still? Is there still a lot of gas in the tank? Because last time I checked the flows, I think last week I saw them. Obviously, you would expect them to slow down a little bit, but when I talk to my colleagues that also have investment advisory firms, we still see a lot of them just getting to the point where they can even start talking to clients about it. I don't know if you have any insight on that.
Well, so there's a couple things. They launched in January. From January to April, advisors were super focused on tax returns, so this was not top of the list. The second thing I would mention is it's the independent RIA, which presently has the easiest access to those ETFs. The RIA channel manages about $8 trillion in client assets. So that doesn't include anything from the wirehouses. So add another 12 plus trillion dollars to that. So there is a lot of room in terms of additional flows coming into the Bitcoin ETF from our perspective.
Well, and I think that's actually really interesting. When we talk to clients on the education side, or certainly on our own investment advisor side at Blue Marlin, we see there just is a lot more comfort when we talk to them about Bitcoin if they were to do it and discuss it first with an investment advisor. And of course, your founder, Rick Edelman, which largest RA ever at the time, at least, you guys are very familiar with that business model. Do you see sort of the adoption curve in general? I know we're talking about flows here into ETFs, but I don't know if you guys have any insight on this. Do you see the adoption rate of the clients that are part of RIAs? Is that sort of increasing as well? Because one thing is just getting the idea, getting the head around this, and then the other thing is actually putting money into it, right? It just takes time, at least it's what we're experiencing, but I'm wondering what you're seeing.
Yeah, I mean, turtle wins the race. We also have done studies and surveys which have, we ask advisors, which are indicating that more are willing to have either already begun investing in the Bitcoin ETF or are planning on doing so over the next 6 to 18 months. So,
Uh-huh.
yeah, I think to your point, like education is critical. There's a lot, in a lot of cases, the client actually knows more than the advisor about this asset class. The last thing an advisor ever wants to do is be a deer in headlights to the client. So advisors, to your point, are getting trained up, educated on this asset class so that that's part of the whole process of it's going to take time before they start, being able to talk about it and recommending it to clients to add to a diversified portfolio.
Yeah, and that's of course where the Digital Asset Council comes in, but also for individuals. I mean, I think education is always a very powerful thing. Now, one thing about Bitcoin, and I'd love to kind of just get a real basic sort of idea for people in terms of where do you suggest they start the journey? Because Bitcoin has, depending on who you ask, and you get pushback on this severely. Is it a store of value? Is it a this or that and the other? And we could debate this till the cows come home and probably still not figure out something that everyone can agree on. One thing that I think is something that a lot of people start to think about, though, is they understand the dynamics of global indebtedness and so on and so forth, and maybe the idea of a digital gold. The store of value, and then the sort of the scarcity value. And again, there's a lot of people pushing back. I'm not including my former boss, Jamie Dimon. But again, that's all open for discussion. What has, in your experience, resonated more with people? Because going down the crypto sort of journey takes time. Like, is there something specific that you see is where people kind of just with a nod opens, or is it kind of a bit different for everyone?
Great question. What I find from people, and particularly when I'm talking to people in person, because you can watch a person's body language.
Yep.
And when you first start talking about Bitcoin, some people are, I don't want to hear about it. The question that I ask, which really breaks the ice, which brings down the guard, so to speak, is, do you believe in MPT, so modern portfolio theory, or do you believe in a diversified portfolio? Generally speaking, the answer is yes. So when you get to that point, the follow-up question is, do you agree that there are things in a diversified portfolio that you might not necessarily like, but you have them in there because you believe in a diversified portfolio? Yep. Generally, the answer is yes. So the next thing is, well, Bitcoin, we feel, falls into that category. What I find happens next is, which people really gets them closer to crossing the line, is we only recommend a 1% to 3% allocation. And the response after that is, oh, I didn't know that. I thought you expected me to put in 25, 50% of my portfolio into Bitcoin. And we're like, no. A 1 to 3 or a 1 to 5% allocation is all that's necessary. And when you walk them through, like I said, diversified portfolio, things in a portfolio you don't like, and a 1 to 5% allocation, that's when people say, all right, I get it. I'm interested in learning more.
And I just had to turn off my notification of the phone, so apologies. No, but I think that's a great point. In fact, before you and I got together, you had a phone call with a client, and we were talking about the volatility and kind of a similar discussion. And when I pointed out the volatility of the asset that he was looking at, he was just like, oh yeah. So, kind of like you point about the 1 to 3%, that's okay, because, Bitcoin, vols come down a little bit, but it's typically more like an 80 vol asset. Your typical stock is closer to 30. So you don't need a whole lot of allocation to that.
And further to exemplify that point is that part of the thesis or the theory of MPT is, if you have uncorrelated assets in a diversified portfolio, it actually lowers the volatility and increases the likelihood of long-term positive results.
100%. Just quickly touch a little bit more on how this fits into a portfolio. And you mentioned MPT. For the listeners who may not be aware, modern portfolio theory, as you kind of briefly summarized it before very nicely, it's really about diversifying a portfolio. And we have a lot of people that are also quite proactive in the market. So this is really looking at it more through like a holistic lens, like your retirement account, your IRA, or even your investing account, but more from an allocation perspective. And we're not here to talk about trading Bitcoin in and out every day. That's not the purpose of this discussion. Um, Correlation, though, which obviously is very closely, about MPT and portfolio theory and all that stuff. It'll change over time. I think that'll be, a safe thing to say. The correlation of Bitcoin to risk assets at different times, and Bitcoin's not old. It's, what is it, 2013? So we're looking at 12 years now. When was it?
It's 2009.
2009. Okay, so we got 15 years. So when you look at the correlation, though, right, which is kind of one of the things right now. So let's say someone has a portfolio consisting of U.S. equities, which basically right now consists of about 40-50% tech due to a few darlings. You throw Bitcoin in there, which currently has a positive correlation to that. How do you kind of, and obviously we're not giving recommendations here, but how do you kind of explain that to people, right? Is it more like the dislocation of the correlation going forward, or just purely just diversifying for the sake of diversifying?
Well, so if you do go back to the beginning of Bitcoin in 2009 and you look over the entire time horizon, pretty much over a majority of the time horizon since its inception or invention, it has been largely uncorrelated. You have 2022 where everything was down, but generally speaking, you could do a Google search. It's largely uncorrelated. So what we recommend, let's focus on a 1% allocation. Typical portfolio is 60% equities, 40% bonds. We recommend taking the 1% from the equity sleeve. So now you're at 59, 40, and 1. That's how we recommend doing it. In terms of its correlation to technology, I mean, there's a greater correlation, but again, I think in a overall diversified portfolio, that's where we feel that it best belongs as it relates to a diversified portfolio.
Yeah. I mean, that makes sense. Another point here that I think is really important, it's probably the most frequent question I get, quite frankly, Don, from our clients, whether it's on the education side and the study trader or on the RIA side, what should I buy? Bitcoin, Ethereum, or the ETF, right? Obviously, again, a lengthy discussion, but there's a few key points I'm sure that we can touch on. I've got some ideas as well, but what are your thoughts on that typically? There's pros and cons, obviously. Yeah.
In terms of the native coin versus the ETF. So if you're a maximalist, you're going to say, not my private keys, not my coin. Yeah. But from a perspective of an individual investor, or particularly somebody that's an advisor managing individual investors' money, it's just a lot simpler and a lot easier to go the ETF route. It's really that simple. It's simple. The folks who argue on the side of owning the native coin, particularly as it relates to something like Ethereum, is, first of all, it trades 24 hours, which the ETFs don't. They're, during market hours. There's no staking. And again, the Ethereum ETF is not officially launched, but when it does, you'll not be able to stake with the Ethereum ETF, where if you own the coin, you can stake. Mm-hmm. So you can, for those that don't know, it's essentially you're earning more of the coin. And then you also, where it lands on cost is debatable in terms of, in the long term, the cost of owning the coin versus, because there's an annual fee on the ETF. And then lastly, on the coin, you can borrow against it. So you can put your coin up as collateral to, I don't know, let's say you want to put a new bathtub in your house or something like that. Where with the ETF, you don't have that ability to borrow against it. And then one other that I just remembered is, it's when you own the coin, like I said, my coins, like, you're in control essentially of the custody of the coin. Whereas with an ETF, the issuer is the one that has a custodian who is handling the coins. And if they get hacked or something like that, you could be at risk.
Yeah, sure. And there's plenty of stories on that.
It goes both ways, though. You could lose your keys. You could, what if your thumb drive malfunctions? I mean, from the perspective of an advisor, it's just a lot simpler to go the ETF route.
And quite frankly, for a lot of individuals too, like I mean, we have a lot of our clients who are sort of more in the baby boomer age. They're not like 20 or 30, and they just feel more comfortable just hitting a button on their
Exactly.
broker account. One part there though, and I don't know how far this is something that kind of fits into your thoughts as well. But when you think about, as a former investment banker, packaging products and selling products and all that stuff that you do, one of the things that struck me immediately when they started announcing the Bitcoin ETF, very much like the gold ETF, many years prior, was, well, and much more so actually with the Bitcoin one, because the whole point of the Bitcoin is kind of like this new ecosystem, kind of like, or at least part of the arguments for some people is of that, right? Outside of the traditional fiat money kind of thing. But if you really think about it, what the ETF did is kind of bridge these two worlds now, so that you could almost make the argument that, well, you're now buying Bitcoin, but it's now all being bought by people who are buying, essentially think they're buying almost like a stock. Like, and again, you can talk about this in many different ways, but it's just one thought that I always like to put in people's heads, like, understand that the ETF, make it easier, but also may, and again, this may be a question, make Bitcoin a little bit less kind of like the point that it originally was supposed to be. I don't know. Do you have any thoughts on that?
Well, yeah. I mean, if you're if you're a maximalist and you don't like uh, government regulation, i.e., the SEC, or you don't want institutions involved, I mean, good luck. I mean, I think that for anyone that holds Bitcoin in whatever shape or form, these people are going to be the benefactor of having it, for lack of a better phrase, be more institutionalized. I think that benefits everyone. And I think in terms of, everyone, I don't like talking about price predictions, but of the remaining supply of Bitcoin, there are more US millionaires than there are remaining supply of Bitcoin. In terms of total Bitcoin, which is 21 million coins, there's more millionaires in the world than there are total coins of Bitcoin.
Yeah.
And I mention that because if each one of those people wanted to buy a coin,
Yeah.
there's only one way the price can go, which
Yeah.
is up.
Yeah.
So it's
Which,
still
quite frankly, like to me, and again, not to talk price predictions here either, but I think about this probably once a month. I'm like, you know what? Given all those statistics, and I do math, and you can, like, it is kind of surprising to me that you don't have maybe double the price on Bitcoin right now. But then you see, like the Mount Gox right now, and all those kind of things, that there's a lot of supply coming back onto the market. But intuitively, it should be a lot higher. Just given the dynamics you mentioned.
Well, our founder, Rick Edelman, just did a blog on, and I don't want to go into the weeds on this, but we feel that a decent reason or a reason as to why that's happening is what's called the basis trade, which basically means hedge funds are buying either the coin or the ETF, and they're selling Bitcoin futures, and they're pocketing the
Yeah.
difference, which
Yeah.
is the reason, which is a reason. I don't know if it's the only reason, but it's a reason as to why you haven't seen this big price appreciation from where we're at. Yet it's still, I think, even at wherever we're at 62,000, I still think it might be the best performing asset class of
Yeah, I mean,
20.
it's up like 40%. I mean, and we typically try to make this a bit evergreen, but yeah, I mean, like right now, as we speak at this moment, it's up 40% for the year, something like that.
Yeah.
Got a few stocks that do better than that, but anyway, no, but I think it's interesting, right? So I guess the sort of the final, or the really the base question that I always try to ask people when it comes to Bitcoin is, how do you get people to kind of, we addressed it before, but within the portfolio context, and maybe just kind of more broadly, kind of, believing in it may be different than saying I see some sense of it. We talked before, you get people across by, the diversification, but where do you really, like, if you want to go a bit deeper, like, do you see a lot of people really getting to the point where they believe in it? and not maximalist kind of levels, which is, I should define what that means. Like these are like pure Bitcoin. That's like the only thing that matters to them.
Right.
Um, where do you see, like, or what percentage of people that you talk to do you really see becoming complete believers? Whereas, okay, I see diversification because to me, it's maybe like 20% of people talk to, maybe 10. I wonder how many people, or I don't know if you can put a percentage on that.
I mean, I think it's less about being a believer and more about, as we've touched on, having a diversified
Mm,
portfolio. So what's amazing is anywhere between a 1 to 5% allocation. It's amazing at how, when an advisor does an annual review with their client, how this could dominate 50 minutes of an hour long meeting when it's a 1 to 5% allocation. That makes no sense. So I would answer it in, it should be, again, understanding your different clients' risk tolerance. If this is something that's within their zone of being willing to have it in the portfolio, it should be just like any other part of an annual review. Like, where are your cash reserves? How much do you have in cash reserves? Versus, you don't want to have like in these 0%. You want a 500 basis point money market. And how much money do you have for cash reserves if you lose your job or something? What do you have in real estate? What's your life insurance policies look like? Do you have crypto? And if you don't, like, we
right.
recommend, we think you should have 1% allocation. So it should almost be matter of fact as opposed to dominating a discussion with a client. So
Yeah.
that's, again, with the caveat being, again, understanding that this is a client where it fits within their risk tolerance. There are some people that it's just wrong for that reason alone. But the reality also remains that if you have 1% allocation in this, if it goes to zero, we do a whole presentation on this. It's essentially meaningless to the return of the portfolio if it goes to zero. Nobody's going to complain if they have a 14% return overall instead of a 15% return overall.
Right. Especially
So
in the 5% T-bill world at this point, right?
exactly.
Yeah.
So as long as you bring this to light and you provide this level of clarity and transparency to your client, that's what they're looking for. You are, as the advisor, their fiduciary in the end. And this is the sort of information that they're looking
Yeah.
for.
But
And if
with
you do it on your own, it's the same sort of mindset
yeah.
mentality. If it goes to zero, it's not going to be damaging if you're doing 1 to 5% of your overall portfolio.
Absolutely, but I think that's also why, coming back to one of my original points, what it's funny because crypto is still very new, as we said before. Um, I find that a lot of people need, like with equities and fixed income, or particularly with equities, people don't feel like they need anyone to talk to because they have a newsletter and they look at it, they have a chart and it's all good. But with something like this, people don't really know where to go except maybe some YouTube channels. So I feel like there's a lot more need for them to get educated, which obviously your firm does, and we can talk about that more in a second. But just quickly on that point you made before about how much time does that take in a discussion, that a client may have with an investment advisor. And if you think about it, there's two things that I would say where it's kind of, at least to some extent, justifiable. It takes a bit more time. A, it's new, as we said, and B, you say 1 to 5% allocation. Let's say 4, just to kind of, but an 80 vol, right? So that 4% allocation is really more like a 12, if if you kind of volatility adjusted in that sense. So you can kind of see why people, as far as they can understand it, right? But all the more reason to be educated on it.
So the answer to that is dollar cost averaging.
Mm-hmm.
If you're trying to hit a bullseye, like, good luck. I don't care what you're investing in. Good luck. So the volatility, so in downside volatility, it gives you the chance through dollar cost averaging to buy at lower prices. In terms of upside volatility, I've never heard anyone complain about their asset gaining too much money too quickly.
Yeah.
So at the end of the day, if you believe in dollar cost averaging, again, it eliminates the emotion, whether it's on a weekly basis, a monthly basis, a quarterly basis. You just go in as a machine, or however you want to refer to it as, and you buy based on your time frame. And then the other thing that you need to consider is rebalancing, because if it becomes hugely successful, a 5% allocation could end up being a 10, 15, 20% allocation. And do you want to rebalance
Right.
at the end of the year? And you also have to factor, and again, I'm not an advisor, but you also have to factor in like, where do you own this asset?
Mm.
And what I mean by that is, do you own it in a brokerage account where if you do rebalance, particularly if you're rebalancing a winner, you have tax consequences to that. If you're in a retirement account and you rebalance, obviously you don't have immediate tax consequences on that.
Yeah.
So where it's positioned within a portfolio, and again, dollar cost averaging and rebalancing are important.
Actually brings up a question, and I literally have never thought about this. I just the thought just came to mind as you mentioned this. I don't even know. Can you own the actual token in a qualified account, like an IRA or something like that?
You can.
You
You
can.
can. You definitely can.
Interesting.
The
Okay.
other thing I would add on the rebalancing also is be careful on the rebalancing. And what I mean by that specifically is the bands of a typical portfolio of rebalancing are because of the volatility of Bitcoin need to be expanded
Yeah.
because of that volatility.
Exactly.
Otherwise, you're going to be rebalancing. It could be daily, it could be hourly.
Yeah.
So you need to expand the bands on your rebalancing.
Yeah.
That's another important thing to keep in mind.
That's a huge point, and I would say along with that, a great takeaway that I mean, honestly, to me, one of the premier points here is the dollar cost averaging. It basically just build up a position. I personally built up my position in 2020 and 21, so I'm for now I'm good, but I did that over about a 9 month period, right? And so I think that's an important point because again, when I talk to people about Bitcoin, it's like, what should I buy, when? Okay. Well, the when is exactly that, right? It's about dollar cost averaging, and that becomes all the more important with something like this. Now, again, Bitcoin's an 80 volatility instrument, not right this minute as we're recording this, but it's been, and it'll probably come down over time, but it's still very volatile relative to more traditional asset classes as well.
Going back to what you said about it, where does it fit versus a tech play? If you
Yep.
Google Amazon versus Bitcoin and you look over the first, I don't know, 5 or 10 year period and you overlay them, they move very similar to one another. So look at Amazon now. Like, who's going to complain about owning Amazon? So again, it's creating this level of transparency and making sure that everyone understands about the asset class, and then just working accordingly. Once you have that education, to your point about rebalancing, dollar cost averaging, expanding the bands, 1 to 5% allocation. Now people kind of like take a deep breath, they understand it better, and they're more open to a willingness to invest in it. And as Rick has said, this is a way of kind of democratizing the playing field, because regular investors who are not accredited or qualified investors, they have access to private equity, VC, et cetera. A regular investor doesn't. And Rick believes that this is an asset where you can get VC or PE like returns, and you don't have to be an accredited or qualified investor.
And again, all the more reason to get educated on this, work with an investment advisor on this, right? Speaking of education, I know you also have a course for folks at home, not just for the professional. What is that called, and how can people get access to it?
Yeah, so we call it Become Certified in Blockchain Digital Assets. There's 5 courses. There's an advisor track, a home office track, a crypto industry track, a consumer track, which is the track that you're talking about,
Yeah.
and then an ex-US track. And within each track, including the consumer track, there's a basic track and there's an advanced track. If you go to our website, dacfp.com/certificate, it'll take you to the pages where the various tracks are. You can compare the tracks. You can see what modules come in this consumer track, and then you can determine whether you want to take the basic or the advanced.
Yeah. And the website is DACFB, as you can see all around Don's head. Just add a .com to it.
Right.
But Don, I really appreciate it. This has been a lot of fun, and I hope for all of you guys listening, informative. Again, the path to crypto. This is not about being an all crypto person, and only. It's really about a diversification perspective. And so I believe in education. That's what this is for. And when Don was kind enough to say that he would be happy to join us in the podcast, I figured, hey, this is perfect. Don, any last thoughts from you?
No, I mean it's exciting times. I think that Bitcoin is really the Trojan horse. Meaning, remember, it's a single asset. There's so much going on in the space. A lot of good things are happening, and I think you'll this is tip of the iceberg. There's a lot more to come after Bitcoin, but we'll save that for another podcast.
I love it. Don, thank you so much, and hopefully we'll have you back another time.
Sounds good. Thanks, Serge.
Thank you.